For the first time, the fintech industry offering small ticket size digital loans has come under the scanner of the RBI for unhealthy practices. The mushrooming of instant loan app platforms have also encouraged many unregulated players to take advantage of small borrowers. The casual approach by some new age NBFCs and recent instances of suicide by borrowers has forced the RBI to relook at various aspects of digital lending, which includes consumer protection, data privacy and security, coordination with other regulators and government agencies to check the workings of instant loan app companies. So, what are the big issues or the unhealthy practices? Some of the digital platforms are charging very high interest rates. There is also a very complicated method of interest rate calculation. Take for instance, under a bank co-lending model, the fintech also lends a small part of the loan from its book. There are also instances of loan app players which acts as a distributor for banks and NBFCs. These back-end arrangements are not transparent or known to borrowers. Fintechs generally charges monthly rates like 2 to 3% per month, which works out to be 24 to 36% annually. The concept of annualized interest rate is not understood by the borrowers, nor these digital players make any effort to explain the annualized rates. There are also instances of unauthorized use of customers' personal data. Fintech, through their apps, are getting a lot of data as customer doesn't mind giving access to their contact or SMSs or photos. Digital lending platforms are also using harsh recovery methods. They are using social media tools to defame the defaulters. It is now time to pull the plug on digital lending players which are exploiting the gullible borrowers. The RBI should create some entry barriers. This can be done by increasing the NBFC's net owned fund requirement from the existing rupees 2 crore. The RBI should also build a strong compliance culture amongst NBFCs. The RBI has already proposed a new 4-layer regulatory structure for NBFCs, which shows the importance of NBFC in the stability of the financial system. The data privacy leakages from fintechs has to be taken very seriously. The fintech should also disclose the lending banks and the nature of partnership or the co-lending arrangements. The fintech should also disclose the annualized interest rate calculation upfront. Digital lending is the future for serving underbanked and the underserved customer both in metros and the rural areas. The partnership of banks, fintech, NBFCs and technology companies will coexist to innovate and transform the digital lending experience. But the government and the regulator have to monitor the space more closely to plug the regulatory gaps and also strengthen the regulations.